Hi, this is BloombergQuint. I'm Menika Doshi, and we're discussing Budget 2022. Now, budgets are all about tough choices, and the finance minister made hers. She decided to go full blast, put all her eggs in the capital expenditure or capex basket, and very few of them in the revenue basket, effectively giving a boost to medium to long-term growth measures, but maybe not as much relief as one would have anticipated when it came to short-term measures that could support those that were worst impacted by this 2-year-long pandemic that we have suffered. Well, that's the choice she made, and we have yet to see whether the government is able to pull it off, both from the point of view of execution risk as well as the point of view of viable infrastructure building. And we'll only know that months and months down the line. Besides that, the budget was one of realistic numbers, both tax revenue targets, disinvestment targets, growth targets. They were reasonably online and not much to bicker there. There were a few surprises. For instance, nobody was really expecting a new law to replace the SEZ Act, so it'll be interesting to see what the government comes up with that. I wasn't surprised by the articulation of a clear tax policy for cryptocurrencies or crypto assets because the Income Tax Act had not yet provided for it specifically, and now it does. A 30% capital gains tax on all virtual digital assets, as the government calls it. Now, these are only some of the highlights. What we've done through the day on BloombergQuint is speak to a vast array of experts, leading voices from the equity and capital markets, economists, corporate leaders, to try and bring you their perspectives on what Budget 2022 means broadly for the economy and you, the common man. So, listen in.
If I had to sort of choose three relatively mild surprises, the government hiking capex by more like 40%, 35 to 40%, as opposed to my expectation of around 19-20%. So big jump in capex seems to be heavily centric on roads, which is a good thing. Second area, no extra taxes on the rich. Pleasantly surprised by that, very relieved as well. And instead, a relief on LTCGT for startups and on real estate. Good to see that. Suggests a degree of maturity about taxing the rich. And the third area was taxing cryptos at 30%. I think that's a good development. It sends an unequivocal message to the public that cryptos are here to be taxed. Relieved to see a budget which is no nonsense, no faltu pronouncements, no faltu ka drama, focused on the money. 6.4% fiscal deficit for FY23, I think, is a believable number. The maths look realistic.
This budget has focused on creating investment. It's actually a partnership budget where government says that I will build infrastructure, I will draft policies and regulations for old economy like agriculture and manufacturing, as well as new economy like digital and fintech. And then I want to build a pathway to position India in its centenary.
Very clearly, with the focus on growth and on putting in more money into high quality investments, into infrastructure investments, you are going to see the impact on that, on jobs, which will help consumption, which will help the overall economy grow. And that's where you're seeing the equity markets react positively. But there is a chance that in the short term, there could be inflationary pressure. That's where the bond markets are reacting.
So I think this has been a big ask of CII to the government to continue to stay focused on infrastructure. And I think the government has not only done that, but enhanced the expenditure. And I think that's great because we are at a time when private sector investment is just about starting to happen. And I think the government needs to support the public sector investment or the government investment in infrastructure to, as the finance minister herself said, crowd in the private investment. And I think she set it for that and set it up well for that. And I think now the onus is on the private sector to, get the investments going.
We did feel that revenues would probably exceed the budget numbers. And I certainly think that even the next year, as things stand, we should get revenues at least 1.5 lakh crores more than what has been penciled in by the budgeting numbers. But having said that, the fact that they have felt comfortable declaring a fiscal deficit number of 6.9% for this year, higher than where they had budgeted, despite this bonanza on revenues, and they're penciled in 6.4%, for the next year, again higher than what the market expected. Clearly, they have decided to give growth a push, particularly capex a push.
let's assume that a taxpayer has had genuine reason for not reporting and then revising the return. Under the earlier law, you could still invite penalty on the ground that you concealed income. Now, the new provision, in my view, is reformative in the sense that if within a 2-year period, the taxpayer wants to revise the return, it can upwardly revise the return, pay the taxes, assuming pay the penal interest as well, but the penalty should not get attracted.
So let's say I were to gift 1 Bitcoin to you, you would be taxable at the time I made the gift, even though you may not have realized money value of it. The government has amended Section 56 of the Act as well to provide for taxation, and the gift will be taxable as soon as the asset comes into your ownership.
Your hands. What I feel is that now what the government is trying to tax this cryptocurrency is the highest rate that is possible to be taxed on cryptocurrency, according to me, in this structure. Okay. Any other type of sale is going to be at a lower number, that is effective rate of tax on such transaction prior to 1st of April will be lower than this.